It's time for more Auction Day on Your Money.
Well, the ongoing drop in property prices in Sydney and Melbourne is making some homeowners nervous, that's for sure, especially with a prediction of a further double-digit decline in the year ahead. But are things as dire as many experts make them out to be? Well, I'm very pleased to welcome, for more analysis here in the studio, Ben Kingsley, CEO of Empower Wealth. Ben, good to have you with us this morning.
Thanks for bringing me on, Leanne.
I think this is the dinner party conversation at the moment, isn't it? What is going on with property values right now?
Yeah. It's too early.
I think we all need to take a big, deep breath, don't we? Yeah. In terms of what's happening out there, there's no doubt that we had fantastic growth. Areas of growth that we haven't seen since sort of 2001 to 2003, and now we're coming off that level. And the reason we're coming off that level, it's actually been manufactured. So it's been manufactured through APRA and also some of the tightening around the lending policy. We just saw there at the auction in Kew in terms of the estate agent talking about finance is so critical. So we've taken that demand level out of the market. And when you take that demand level out of the market, it stops that FOMO effect, you know, that fear of missing out. And so we've gone over the peak in sort of September of 2017, and now we're seeing the correction. Now, this is my 6th correction, so I've been around a while, so I sort of know the cycles in which we work in. And it's really, for me, there's certainly some headwinds in terms of more than we've had in the past. So I do see the correction being probably in that sort of 10 to 15% range. Right. But we can actually change this. We can actually do some different things to be able to re-stimulate the economy, and I think that's up to the regulators.
Okay.
We talk about it a lot, and we've had you on, you know, you're a great friend of our show, of the channel. It had to happen though, didn't it? I mean, the horses were bolting.
Totally.
We were, you know, the gates were swung open, they were gone, and we needed to slow it down for various reasons. Some of the prices that were being gone over, people were buying shocking properties, doing nothing, putting it back on the market and making money. So it sort of did have to happen, but it's not as, you know, the word Armageddon, it's not as dire as that to slow it back down.
No, I think the sort of commentary around 40, 50% is unhelpful. Okay, so yes, we had over-exuberance, and when you get over-exuberance in any market where there's strong demand and tight supply, you're going to get appreciation. So when you see record low interest rates coming into play, which is where we're at, so we're at record low settings of interest rates, naturally we're going to see asset appreciation. And that's exactly what happened. So APRA sensibly came in and started to put some levers into the market to slow that demand down. So the first thing they did was put a speed limit in terms of on investment lending. Then they circled back for interest-only lenders. And now they started charging investors a little bit more. So the appetite has slowed down, and that's meant that we've seen the peak of the market, and now we're coming off that. So good news is the speculators are out. You know, that was pushing these prices that were going to unsustainable levels. And I've commented before on the show about 54% of new lending going to investors is unsustainable. You know, and as an investment advisor, those warnings were clear to us. So we think the regulators have done the right thing to introduce these macro-prudential regulations. But now it's also incumbent on them to watch the market and potentially look at the levers that they're in control of to try and make sure that it is a softer landing rather than a hard landing.
So Ben, let's get out our crystal ball, and you say that we are in correction. I know that there have been some pretty dire headlines, some calling 40%, others 20, top to bottom. What do you think? How much worse could it get from here, and what is, say, the best case scenario even?
Yeah, so Leanne, I think we need to be understanding that the property market is multiple markets. So what we're really talking about here is namely Sydney, you know, which has had over 80% growth since 2012. So then you've got Melbourne's had about 65% growth in that same time period. We're actually tipping that Brisbane is going to have some growth. We're tipping that Adelaide is also going to have some growth. So that's a big news story, but we definitely think that the heady days of the Sydney and the Melbourne markets are going to come off. Now, I'm not so worried about established areas where we've got good household income and good wages, good employment. Those areas are probably going to come off around 10%. I am concerned about clusters of marketplaces being unit block areas where there's clusters of large developments that have occurred, where there's a lot of investment activity that went in there in, say, 2015, 16, 17. Those areas are going to come under price pressure because the property prices aren't going to develop at the off the plan price points, and secondly, everyone's going to come out of their interest-only period at the same time. So if there's been a lot of investment activity in those areas, those particular pockets aren't going to perform well. And we might see as much as 25% price correction in those areas. Because what's going to happen is there's going to be panic.
Too much stock.
Yeah, there is. There's too much stock. So there is an oversupply in those particular areas. Some house and land package areas as well went too far. They're just not. They don't represent fair market value.
Yeah.
Now, ultimately, fair market value is what a willing buyer is to pay a willing seller, and we see that live at any auction on a weekend. And we've definitely seen the appetite for borrowing money and buying property has cooled off.
Yes.
So that is naturally going to see that slow down. And if we get realistic vendors, we're going to see some of that correction come through.
So you talk about, you know, these prime suburbs that obviously hold value. They retain their value.
Yeah.
They're more established. What do you think is impacting value for people who might be in these areas where there's lots of apartments, or in new suburbs where there's a whole sea of brand new house and land packages?
Well, it's that demand and supply story. Ultimately, price will find its equilibrium once we go through shortage of supply, high demand, property prices pop, that sort of thing happens as well. So it's really important that you understand that when you're looking at property, that you understand it's going to go through these natural cycles. But when you do see a glut of properties that are oversupplied, then ultimately there's going to be a story around pressure on those price points, and that's going to be worse than other markets.
Ben, you're obviously a buyer's agent,
Yes.
and you are on the ground yourself, so you're really out there and you're seeing what's going on. From your perspective, I mean, are you still seeing a lot of that demand coming from home buyers? You talk obviously a lot about supply, but the demand side of things, how are you seeing it on the ground?
Yeah, on the ground is, so in the heady days, you've got between 5 and 8 bidders. Like, it's frantic, it's crazy, you know, and as you say, just list a property and off it runs. But ultimately, when you get to a marketplace like we're getting at, you're getting to a situation where you might have just the one buyer or the two buyers. So the agents have to work harder. They need to qualify their buyers better. They also need to qualify the range that they can push to. So what we're also seeing is, you know, reserves were being smashed when you've got all this pent-up demand, but now we're actually falling more likely in the quoting range. So it'll be interesting to see what happens in Q next up, in terms of, we've got a quoting range of 2 to 2.2 million. And that's probably about on the money there in terms of what that looks like. And you know, those agents are going to be careful around who their buyers are and how many buyers they've got on the ground. So there'll always be the onlookers, but their job is to qualify those serious buyers.
You mentioned how, you know, you've been through a few cycles. I'm wondering, in the last few days we've had on the news, you know, in America, in Australian Stock Exchange, really quite dramatic drops. And I always think, from my real estate background, not as advanced as yours, but close, the ebbs and flows of stock real estate, stock real estate. Do you think that's going to positively affect the real estate market when people are saying, whoa, that's being a bit scary, maybe I need to watch, obviously subject to finance?
Yeah, I think history tells us there's a stronger correlation with the cost of money. So when interest rates go down, that's when property prices usually do their best growth story. I don't think that, you know, the dichotomy of shares versus property is an interesting one. Yes, you know, we've got to put our money somewhere. Now, what normally happens is there's a flight to safety. So we'll start to see people focusing on putting their money in their offset accounts, or in potentially, you know, sort of more safe haven investments. The share market's volatility is concerning for a lot of people, and that's why there's usually a flight to bricks and mortar. You know, but that's a little bit volatile at the moment, and the sentiment is really being challenged. So I think for the moment, it's probably going to be hands in pockets, and people not doing anything until they see value. And when they see value, they respond to that both in the share market and also in the property market.
We were speaking earlier about value and what's been impacting value, and we had a couple of the factors that popped up on the screen, you know, be it location, appeal, or economic activity. What are some of the factors that will actually protect a drop in value?
Yeah, so it's usually down to, you've got to understand that as an investor, we should be a price taker, not a price maker. I mean, so when you start to think about mining towns, it's always the investor that drives the price. And when the economy blows up and the economic downturn occurs, it's usually the investor that's holding the baby with the bathwater, like they've thrown it out. And we see this dramatic fall. So owner-occupier appeal, 70% of the marketplace buy with their hearts, not necessarily their heads.
Yes.
So if you see an asset like a character charming property like we're about to see in Kew, then usually there's an emotional attachment to that. And so those types of properties usually don't have that compression risk of downward pressure because they're scarce. You know, they're unique. They're usually in good locations, good streets. And those are the types of things that maintain those values. Now, we do see choppiness at the very top. So the top 25% quartile, there's volatility in that because a price could move from $5 million to $8 million very quickly. When things are good and bonuses are being paid to all the CEOs and executives, we see that market run. Now's not a time for that market. But really those good quality locations where you've had long-term historical growth, you usually see that flight to safety in those areas. And the areas out wide, the new greenfield estates, they're also a little choppy as well.
For people now who are watching, you know, it's not just young ones. They're mid-30s, mid-40s, you know, looking at the finance and things. What sort of advice are you giving to people to get into?
So depending on what they're trying to do, so if they're trying to get into the market and buy for the first time and they may want to go out into a new greenfield area, my number one tip right now is keep saving. Like, why would you invest in property if the value of the property is actually still falling?
Yes.
So you're better off to save up a bigger deposit and potentially avoid mortgage insurance. So keep saving, but watch the market, see where it's bottomed out, and then start to take the opportunity once you feel there's value in that market. For investors, it's a great time to be an investor.
Yes?
Yeah, it is, because ultimately if you're coming into the market, you're seeing great buying opportunities.
Yeah.
And ultimately you can haggle and negotiate as hard as you've ever done. Like for the last 3 or 4 years, it's been difficult. You know, we've had to negotiate on terms and sort of take different approaches in terms of quick cash settlements and things like that to try and get an edge to beat out that owner-occupied buyer. But now there's a lot more opportunity for us in the marketplace because we're seeing, you know, we study demand and supply in every marketplace across Australia. So we're buying in Southeast Queensland, we're buying in Adelaide, we're buying in pockets of Melbourne, and we're seeing great buying opportunities because everyone else is fearful, and so that is a good time for us.
Yeah.
I think you're also dealing with people who, you mentioned at the beginning of the segment about, you know, people just too much, and it's the investors that we're really dealing with. Mums and dads buying their primary residence in one house. It's not such a big ebb and flow, is it? So it's that when you're talking with your clients, you're trying to resist them being too overly exposed, isn't it?
Yeah, it is. I mean, ultimately it still comes down to their cash flow story. So we will tailor a strategy based on the surplus cash flow and what they can borrow and what they can hold on to for the long term. I mean, what we saw recently in the property market is everyone's speculating, and this short-term growth and this FOMO effect, everyone's trying to get back into the marketplace, and that's a real challenge. So we always try and make sure that our clients can hold the property. Look, short-term for us is 7 to 10 years.
Yeah, right.
So we're not in it for the short term. We're not in it to harvest equity and renovate for profit. These are people who are busy professionals who want to just basically execute on a really nice property and get good tenants into that property and build up that wealth and retire their debt out so they live off the passive income.
Yeah, the light's further down the tunnel, and it's not so scary then because there's a few bumps along the way if you're looking further there.
Yeah, you make a good point, James, in terms of, you know, people are going to experience negative equity at the moment in some of their properties, and some may be worth getting out of. There could be some areas where the opportunity cost, or you could be in negative equity for 5 to 10 years. Now that's too long. So you may have to realise that you've made a mistake, take your medicine, cut your losses and get back into a better performing asset. But for those who have seen their property prices come off 3 or 4%, but they're in a quality location with strong owner-occupier appeal, good amenity, good lifestyle drivers, those people have been through this before, and they'll know, and we can show them the data, that those property prices are going to go up over time and they're going to be happy with their investment over the long term.
I'm wondering too, when you're talking to people, we're going to have a few property styling experts on the show today. So increasing the value too. Now, instead, for people with a property portfolio, looking at just watching what you've got to make sure you've got positive cash flow, which then helps you be ready to pounce when the time's calmer.
Yeah. So James, I think, I mean, some of the better assets in terms of the capital appreciating assets, usually we have to go towards that shortfall. So we're probably negatively geared in the first instance of the first few years. But ultimately, we need to look at the cash flow and make sure it works for us.
We are going to head back now to Ashgrove. Our next live auction is about to get underway. This remarkable residence at 34 Banksia Avenue, Ashgrove in Queensland. The preamble's getting underway there with the auctioneer Hasley Cush. So let's take a listen in.
We're ready to go? All right, let's get into it. Good luck, ladies and gentlemen. You've been through it. You're here to buy it. I'm here to sell it. Where do we start? Opening bid, bidder offer to start. Where do we start? What do you think? Only risk you run calling out a figure is the risk you buy it, and we'd all love to buy it at a price. Where do we start? 1.3. 1.3. 1.6, that's a much better start. At $1,650,000 with you now, let's go to 7. At $1,650,000, let's go to 7, the rise. At $1,650,000 now, what about 7? At $1,650,000, I've got $1,650,000 here. At $1,650,000, bid away now, let's go to 7. At $1,650,000, bid away now, $1,650,000 now, he'll be 7. At $1,650,000, bid away now, $1,650,000. At $1,650,000, buyers now chasing 7. At $1,650,000, call it out. 1.7. At 1.7, bid away now, 750 the rise. At 1,770,000 a bid away, 1,007,000. At 177 bid away now, 7. 1,750, I look for the 8. At 1,750,000, I bid away now, 1,750,000. At 1,750,000, I bid away now, 1,750,000. At $1,750,000, fair warning, folks, 1,750,000. First call, Matty, let me know, buyers here. At $1,750,000, at 1,750,000. 1.8. At 1,800,000, bid now, 1.8. Do you want to go 50 or do you want to give him the Jeff Horn to 2 million? At 1,800,000, I bid away now, 1,800,000. Or it might be the Terence Crawford. At $1,800,000, 50 the next one. And 50. Do you want to go to 25? Keep it moving. 1.8 bid now, I'll give you some hubba thinking music. At 1,888,888 bid at 1,888 bid now. At 1.88 bid now, 1,800,000. At 1,800,000, I'll bid away now, 1.8, let me know. At $1,800,000, buyers. First call, bid away now, 1,800,000. Your time and opportunity. Take the time, use the time while you've got the time at 1,800,000. 1,810,000. Do you want to go 20 or 50? Your call. 1,810's the bid. Over to you, sir. 1,820. 1,820, 20 a bit away now, 1,820,000. I'll tap that. 1,820, 20 a bit away now, 1,820,000. At 1,820, 20 a bit away now, 1,820,000, 20 the bid. At 1,820, 20 a bit away now, 1,820,000. At 1,820,000. 25. Now you can go 30 or you can change the strategy to 50. 1,825,000, it's over to you. At 1,825,000's the bid. 30. 1,830,000. 1,830,000, 30 bid now. At 1,830,000, 35 or 50. 1,830,000, 30's bid. At 1,830,000, 30 bid away now. 1,830,000, 30 bid. At 1,830,000, 30 bid now. 1,830,000. First call. Matty, instructions. 1,830,000. At 1,830,000, 30 bid now. One minute for you to think about 5. 1,830,000. 1. What do you think? 35. 36. 40 or 50? 40. 41. 45. It's only costing you 1s, it's costing him 4s. 46 or 50? 840. 46. 50. 850. 850 the bid. 51. 55. 851, 1 bid of 1, 1 bid of 1, 1 bid of 1 bid of 851, 1 a bid now. I'm just waiting for the instructions. 1,851,000. 55. 1,855. 1,855. Matty need to know. 1,855. 1,855. 5 bit away now. 1,855. Just waiting to find out. 1,855. I promise I won't forget to tell you. 1,855. 5 at a bit away now. Matty. 1,855. Yes? We're on the market? On the market. 56. 1,855. 1,855. No better bid, you'll buy. 56. 1,856 to 60. To 60. 860 and 61. 861 on the million. 1,861. 1 bit of 1 and 65. Or up to 70. 65. 865. 66. 70. 870 and 71. 871, 1 bit of 1. Change the strategy. 871's the bid. 1,871 is here. 1,871. 1 bit of 1. What's selling? 1,871. Sir, madam. Second call at 1,871. 1,871. Need to know we sell. 875. 76. 76. 80. 81. 81. 881 on the 1. Go to 9. 881 on the 1. 1,881. 1 a bit an hour. 1,181. 1,881. 1 bit of 1. First call. 881 on the million. 1,881. Second call. All other parties. Down to 2. 81's the bid. 1,881's the bid. We're on the second call. 1 to go. 1,881. 1.9 on a good bid. 991. 901 a bid now. Go to 2. 901 1 a bid now. 901 1 a bid. Only got to be in front. 1901 and 5. 1901's the bid. 901 on the million. 1,901 1 a bid 1 and 5. 905. Have the conversation. 905 5 at a bid now. 1,905. 1,905 5 at a bid away now. 1,905. 905 on the $1 million bid now. 1,905. 5 at a bid now. 1,905. 5 at a bid of 5. 5 at a bid of 5 plus the 5 and 10. 5 10. 9 10. 1 9 10. 15. 20. 25. 30. 35. 40. 45. 50. 55. 955's the bid at 955 on the million. 1,955. Do you want to go straight to 2? 1,955 is a bid now. 955, 5 at a bid of 5. 1,955. 56. 956 the bid. 60. 60. 960. 960 on the million. 1,960. 1,960 bid. 1,960 bid away now. 1,960. 1,960. 1,960. 960 bid away now. 1,960. 960,000. Take the time. 960 on the million. 1,960. 60 bid away now. 1,960. 1,960,000. Take the time. 1,960. It's a big decision. 1,960. 960 on the $1 million bid. 61. 65. 65. 66. 70. 70. 970. 80. 980. 85. 90 or 2. 985 the bid. 1,985 current bid. 1,985 5 at the bid of 5. 1,985. It's sitting in front of the benchmark. First one there at 1,985. 1,985 5 at the bid of 5. 1,985 5 5 bid of 5 5 bid of 5 bid of 1,985 5 at the bid now. 1,985 5 at the bid of 5 5 5 bid of 5 1 1 once. 90. 2 million. 95. 1,995. 1,995, 5 at a bit of 5 at a bit. We want to build the suspense before the 2. 1,995 the bid. 1,995, 5 at a bid now, 1,995. 1,995. It sits there in front of you. The benchmark play. 2. 96. It's right there for you. 2 million, $2 million bidder now, 2 bidder 2 bidder 2 bidder 2 million bid. 2 million. I think the knockout play's got to be 3 million. $2 million bidder now, 2 bidder 2 bidder 2 million bid. $2 million bidder now, 2 bidder 2 million bid now. 2 million. You sure? You get the chance to change your mind here. I'll give you 3 calls. At $2 million, we are going to sell to the highest bidder. At $2 million, in your favour. No better bid, you'll buy. At $2 million, first call. If you want to go 2 million and 1,000, it'll be 5,000 on your last bid. Second call at $2 million. 2 million and 1,000. To 3 million, you're going to take that? No? Okay. 5,000 on the 2 million. 2 million and 5,000. 6. 6,000 on the 2. 10. 10,000 on the 2. Okay. 2 million, 10,000. I'll give you the time to have a conversation. 2 million and 10, no better bid you buy. At $2 million and $10,000, we are selling. First call. At $2 million and $10,000, second call. 11. You sure? Third call, last call. I cannot reopen once it's sold. At $2 million and $10,000, we are selling. You're definitely out. Definitely out. Third and final call, selling, going, done and sold. Congratulations at $2 million and $10,000. Thank you very much for your bidding.
And that is how it's done on this show.
That was a really exciting auction.
It is exciting. Hazley Cush is, we love his work on the show. He just runs a really cool auction. He also knows how to, which I find hard to do. What a great result. It started off there at 1.3, which was a crazy bid, and the second bid was 1.65. There was a couple of people really keen for this house,
Absolutely.
wasn't there?
Well, the 2 bidders really at it the whole time.
Yeah. One went up by $5,000, they put another one on top. Another $5,000, another one on top.
Yes.
Then we got 20s and 10s, and it started to go down. If you can't feel the excitement of the auction at home, there's something wrong with you, because that was just the epitome of a great auction and also a great house.
Yes.
It was presented beautifully. Yeah. Look at it. It's a home you want to live in, no matter what your taste is.
That
wide,
real Hampton style that you were saying,
very
James.
Hampton style, really open and living, and really Australian coastal too, you know, like feeling they're fresh and bright, and those wide, expansive openings. You can just see you want to be here with your family and friends. You want to have, you know, dinner parties and birthdays and you know, seasonal things, Christmas. It's just the space to have that, and that beautiful pool and that back area that's perfect for guest accommodation, friends from overseas, or the teenager when they say, look, Mum, I've got to move out, but I can't afford to. Like that little boy who was scratching his head in the background. The kids right behind Hazley Cush. And a really good result.
Award-winning renovation as well.
It did. It won 2 awards.
You can really see it.
Great reminding there. Master Builders Association. So we had HAO on today, but that's the MBA. Awards for renovation, and also the Queensland Master Builders Award for the kitchen in that home. But beautiful styling, and just a really strong flow. And you could see it ticked all the boxes in presentation.
Yep.
$2,010,000. Obviously that $2 million mark just pipped out that final person. I think they were on the $2 million sealer. It was on the market at $1,855,000 after a few questions. And you know,
they did a little better than that. You'd think that the seller was pretty happy?
I think they would be very happy. If they were happy to go on the market at that price. I mean, that's you know, nearly just shy of another $200,000. We've got to put it into realistic terms of just what this is worth. But this is, you know, a pretty stunning home in a great suburb, and it's got that really Queensland vibe of that. That shot there says it all. That inside outside. You want to entertain. You've got the fans to keep the heat away and the flies.
What about the outhouse at the back of the pool? Or the pool house, I should say. And it's got an ensuite in it.
I live in that. I think it's great. And it just adds value, and there's a grass in there for the kids to kick a ball around. So just a beautiful feel. Really well done and a great result. Our next auction is already underway. It's in 38 George Street, Clarence Park. The preamble has started for this beautiful 3-bedroom, 1-bath, 2-car property. Let's see where this one goes.
Here, 810, 825, 825, fast and furious, 830, 830, thank you, 835, that's the way to do it. 845, 850, 855, 860, that's the way to do it. $860,000, I'm just trying to get a bit of breath here. 860, I haven't even called the numbers out. At $860,000, we bid at number 9 on the left-hand side at 860. At 860,000, over to you, madam, if you like. At $860,000. $860,000. Are you done and finished? 860, I'll say on 5 if you don't mind, madam. Be a good sport. 865, thank you. Get mixed up with my arithmetic. 865. 865, next bid's 870, $865,000, clearly bid here at 865. Give you a chance to have a think about it.
866.
I'll tell you what I'll do. I will take a $1,000 rise. 866, 867, 867, 867, right-hand side here at 867. I think we've got about 7 registrations here. There's about 4 of you haven't put your hand up. 867, 869, $869,000 back with the start here at 869. 870, even money at 870 on the right-hand side at $870,000. Bidder number 6, $870,000. That's more like it. Now we're down to the nitty-gritty, ladies and gentlemen. So take a deep breath, and here we go. We have reached the reserve price. The property is on the market. Will be sold to the highest bidder here at the moment, today. At the moment, ladies bid here, bidder number 6 at $870,000. Clearly bid. And here we go. First call at 870. 871. Bidder number 3. I'm going to slow it down a bit because I want you to regroup, talk to your partners or your advisors. We don't want anyone saying later on, I wasn't given a chance, I would have gone more. We don't want that. 871. 871. Ladies bid at 871. $871,000. What do you say? On the market. Going to be sold. We're playing for keeps. 872. Back in at bidder number 6 at 872. 872 is the bid. 872. Can't dilly-dally. 872. What do you think, Patrick? Out. Definitely out? Thank you for your bidding. I wouldn't question that. You're definitely out, are you? 872. 873. Come on, squeeze it, guys. It's worth it. Great area, great location, beautiful property. Still got more potential if you want. Beautifully presented. We've got no more of these. They're in high demand. What's the bid? 872. 873. Ladies bid at 873. 873,000. Are you done and finished? What do you say? First call, 873. 874. Back there at 874. Why don't you blow her out of the water with a big $10,000 rise or something like that? 874. 874, ladies bid at the back. 874. $874,000. All done. All finished with the bidding. You stall, I'll call. First call. Second call at $874,000. Ladies bid here, number 8 at 875, is that right, or more? 875, keep it at 1, so don't mind, it's all money for the vendor. $875,000. That's your first bid. You've got to make more than one bid, that's the rules. 875, 875. Your rebuttal there, madam? 875. Ladies bid. Good thing about auction, you can see exactly what's going on. It's all genuine bidding. Imagine doing this behind the scenes with best offers and all this sort of thing. This is a perfect auction property. And as I said before, you want to buy a property that no one else wants. So if you do win this today, you know it was being hotly contested. It's a very, sorry? 876. 877. Bid of number 8. 877. 877's the bid. Second bid, you're in the clear. 877. 877,000, all done, all finished with the bidding. Let's go through the calls, 3 calls and 3 calls only. Once this hammer drops, that's it. $877,000, all done. 877. 877. Just confirm that, madam. 877. 877,000. First call. Second call. 880. That's a lucky number. What number are you there? 880,000. 880,000. That's more like it. At 880,000, you bidder here at 880. $880,000. I'll still take ones if you like. 881. 881. 881. 881 over there at $881,000 bid number 8. $881,000. I said before, you can't make one bid. 881. 881. $881,000. First call at 881. Ladies bid. With you at 881. Second call at $881,000. Are you done? Are you finished with the bidding? Just about to make that third and final call. You're definitely out, madam. Bids here at 881. Definitely out. Can't tempt you for $1,000 for your future happiness. Invest in your future happiness. What do you think? You don't want to kick yourself. If you've got more money, let's go. Come on. 881. I'm working for the vendor here. Thank you. Definitely out. Thank you for your bidding. Madam at the back. Bids over here at 881. Madam, lady and gentlemen. Definitely out. Thank you for your bidding. Okay. Situation's quite clear. The bid's here at $881,000 on the market. It's going to be sold. Everybody's out. First call. Second call. 882. 883. 883. I wouldn't wave that brochure, madam, at this stage of the game. 883.
We're at 882.
We're at 882?
Yeah.
What's your bid? 882? Keep up with it. 883. $883,000. They can't make a blunder on national TV. At $883,000. 883 is the bid. First call. Second call. Third, final, last call. What did you whisper in her ear then? Oh, okay. You're definitely out. Thank you for your bidding. 883,000. Can't dilly-dally. Third, final, last call. You're out. You're out. You're definitely out. Bids here. $883,000. All done. All finished with the bidding. Bid, offered, and sold to you, madam. Give them a clap. Congratulations. Welcome to Clarence Park. I know you love the home. You'll do some fantastic things to it. On behalf of our company, Harris Real Estate, have a great weekend. Commiserations to the runner-up bidders. See if we can find you something else. Thank you.
All right, fantastic. Another one sold, James.
It is another one sold.
883,000.
Yeah, started off, earlier bidding. Not really big jumps in this one.
No.
Sort of just over the mid-eights. It's an interesting role of David Cox, auctioneer and agent. So he obviously knows all the information. He knows what the vendor's expectations are.
Yes.
He knows the bidders.
Yep.
They had quite a good turnout there in Adelaide, and we are seeing good auction figures down in Adelaide, particularly compared to Sydney and Melbourne.
Why is that? Is that because a lot of, say, Sydney buyers are sort of moving down and finding value in other areas?
See, you're good at this. It's exactly right. I think that people are seeing more realistic buying. I mean, if you look at that home, it had such stunning... It was like a designer gingerbread house with this beautiful stone facades and beautifully presented and great block of land. And that bidding, buying for $883,000. I mean, look at that. Who wouldn't want to live in that home? And yet it had modern feel inside. That's a different house. But it had a beautiful feel. There we are. This beautiful stone facade. And it just had great character throughout.
Yep.
And just a beautiful home that you'd want to spend time in. So they did a great thing. Early 1900s build, 604 square metres. And yes, it is. I think it is that Sydney buyers and Melbourne buyers who have sort of pushed it up with the investor market as well.
Yeah.
But good auction, strong bidding, quite clean. And well done to David Cox of Harris Agency. I think he ran a very smooth and calm auction down there today.
And we were talking about the block a little earlier as well with David, and he was saying it's rear facing north and then had that double side-by-side carport as well. you know, to the side of it. So really nice design. 3 bedrooms, a newly renovated kitchen that we saw a little earlier.
And styled by the owner. And again, I'll give her a shout out because I think she did a great, just the
Really
right
good
balance
job.
of really nice contrast, some strong styling, and just adding interest to the space without styling overwhelming it or underwhelming it. So really nice.
Which we heard
place.
earlier is so important.
So important.
Especially in a market like we're in at the moment.
Exactly. So congratulations to the new vendors of that property. And
38 George Street, Clarence Park.
Beautiful property.